What's up, everybody? It's Matthew Mickey, and in this class, I'll be doing a workshop on how to pull actual data for free so you can find the outliers that we talked about in previous classes. All right, so you want to go to Zacks.com, go to screening, then go to stock screening, and it'll take you to this page, and we want to change our market cap to more than 3 billion. So we're going to put 3,000 in that because it's done by thousands. And then you can even add one for, we want to stay between 3 billion and 10 billion, so you can put one less than 10 billion. So now you want to go to the Edit View tab at the top. You want to go to Company Descriptions. You want to check Exchange, Industry, and Sector. Now you want to go to Price and Price Change and click Last Close. So now go to EPS Surprises and Actual. Click on Last Fiscal Year Reported. And now we want to go to the EPS Estimates and click on F1 Consistent and F2 Consistent. So now you hit Run Screen, and then you hit the Download CSV file. Now you can add more, criteria to this, but in the beginning you want to just keep it basic till you understand this part of the process. So now you open it, and this is what we get. So we have to do some data mining first. So we wrap the text on the titles, and then we're going to bold them and set it up that the designs, right? So now I want to reorganize the column, so I select the whole column. I go to the right side line, and then I right click on my mouse and drag it over to where I want it. I release, and then it's going to bring up this, and I'm going to hit Shift right and move. And so organize your columns the way that it makes sense to you. This is how I set mine up for now, because it allows me to look at the exchange, the sector, and the industry all in one area, and then it lets me look at the end of the fiscal year along with the report dates, and then everything's focused on exactly how I like to read. All right, so go through and adjust the column widths and the row heights the way you want it, rename stuff, bold it, do whatever you got to do. So here we can see the company name, the ticker, the exchange it comes from, the sector, the industry it comes from. Then we get into the market cap, the month of the fiscal year end, and the last reported fiscal year. And this is important to focus on because this is one of the first steps to the attention to detail. How a business operates and how they project is based off of what quarter of their fiscal year they are. So most are in December, but then if you look at the service sector, most of them are adjusted because they have the seasonal tendencies to adjust for the holiday seasons. All right, so then you have your price, and then you have your EPS 0, 1, and 2, right? Those are the consistents and then I just renamed them to what I know them as. EPS 0 is last year's EPS, EPS 1 is the current year's EPS, and EPS 2 is next year's EPS projected. So before we start doing our formulas, we have to filter one thing, right? So add a filter, deselect everything, and then click on OTC, and then the other one here, and then delete them all, because you're not going to have access to those kind of trades, nor should you be in there. Now once you've deleted all those, clear the filter so it brings up the stocks that we should be looking at. So now that we clean the data the way we need to and did the data mining, now we can focus on the formulas of what we're going to build. So put in EG1, EG2, PE1, PE2, and PEGS1 and PEGS2. Now remember, the 1 is the current year and the 2 is the forecast for next year. And so now let's do our earnings growth one. We know if we're going to type in equals bracket current year EPS minus last year's EPS bracket divide by absolute, and then bracket last year's EPS. All right, so that way you get the absolute return. All right, so now you're going to drag that over to EG2, and the formula is complete for the earnings growth. So select the box and then double click it so the formula goes all the way down the sheet, right? So now let's figure out PE. We know equals the price divided by the earnings growth. The EPS, right? So put that formula in there, copy and paste it over to the PE2, double click the box in the lower right hand corner so it copies down as well. And before you move on, double check that PE2 is taking the price and dividing it by EPS2. So it takes the forward looking EPS and it finds the PE projections for that next year as well. So now let's do our PEG, and we're going to do equals, and we're going to take our price earnings ratio 1 and divide it by bracket earnings growth 1, multiply by 100 bracket, and that's because we want to see this as an absolute number, not a decimal. So now select PEG 1 and drag it over to PEG 2. Double check PEG 2 is taking PE ratio from PE 2 and earnings growth 2, and then double click bottom right hand box so it copies the formula all the way down. It's always best to double check your formulas when you copy them. So now I want to format my earnings growth to be a percentage and my PE and PEGs ratios to be a number with 2 decimals, not 1,000. So now we should already know the sector that we should be focused in because we looked at the Fed Reserve and the bonds and all that, and that should tell us if we're focusing on value versus growth. And then we did our macroeconomics, to pick up the bias of the market, and that should tell us what sectors we should probably focus on. So now we can find the outliers within those industries and those sectors. So in this example, I want to focus on the medical dental supplies, right? So I filter it and then I copy it and I'm going to paste it into a new sheet so it doesn't affect the original data with any changes that I made. So now we want to look at the earnings growth and make sure there's no oddball numbers. And like right here, we can see 2 oddball numbers. But if we look back at the earnings numbers, the EPSs, we can see that the law of small numbers comes into effect. Whether last year EPS numbers were small, this year increased, and the next year is forecasted to be big too. So of course it's going to be a bigger earnings growth. So now we want to do the sector averages. So right below all this, we're just going to go to the EPS and earnings growth and PE and the PEGs, and we're going to average that column so we have a good sector average to compare against. So if you copy and paste the earnings growth sector average formula over, make sure you reformat the price earnings and the PEG ratios back to numbers with 2 decimal places. So now we're going to go back to those numbers that seem radical, that might skew the data, and we're going to remove them just to pay attention to like how they affect the averages for the earnings growth and PE and the PEG ratio. I'm not saying we're going to get rid of them. We're just going to test them, the sector, without getting rid of them to see how the sector performs without them. Why? Because these might be the outliers of this sector, but we do want to see how they're affecting the sector and if they're skewing the data to the upside or the downside. And like you can just fix that, especially if it's earnings growth and due to the law of small numbers by capping the earnings growth or losses by 100. Okay, so let's start the filtering process. Now, first thing we look at is the market cap. Obviously, we want to stay, if we're long, between the 3 billion and the 10 billion. If we're going short, we want to stay between the 20 billion and the 10 billion, right? We want to look at the fiscal year reported earnings month, because that's going to tell us like if it's October and they report in December, then we know that the EPS numbers for the current year aren't going to have as much weight as the EPS numbers for next year, because if they would have made all their earnings growth up in the first 3 quarters. So now let's start filtering for the outliers, and we want to see what the market is paying for a higher premium first, because that shows that the market thinks the company has good valuations and is a quality investment. So we want to see the market paying a higher premium by filtering the PE and doing above average for PE1, and then we do PE2. And so now we can see within the sector what companies they're willing to pay a higher premium for that's above that sector's average for the PE ratio. And now we want to do the same thing with earnings growth, filtered by above average from here, and see we want to see some sequential earnings growth between EG1 and EG2, but in this case we don't, which is fine, because in the next class I'm going to teach you all the different ways to view this and the different probabilities and conditions and different scenarios and how we're going to adjust to them, and then we can even color code each cell based off of the next class to quickly identify it. And then we can do the same thing with PEG ratios, and then all these steps help us identify if this stock is even worth going to the next digging deeper into, right? So first thing we do is we filter by market cap, right? Then we look at the time of the year, they report their year-end earnings, right? Because that plays a big role. I'm going to be more aggressive towards my earnings in quarter 1 and quarter 2 and quarter 3. Quarter 4 I don't really care about them because I would have already made the gains I needed to, and if I don't, then I still haven't made it for that year. I cut it as a loss, and I start focusing on my efforts in my management operation plan for next year, right? And then we filter the valuations, PE1, PE2, how they look in, PEGs. Then we look at the earnings growth, and we filter that to see how above average it is within the sector, right? And then we look at the EPS numbers, is it growing or is it decelerating? And if it does decelerate, like last year it was a high number, and this year it's a low number, and next year it's a high number, we got to figure out the why if we do decide to invest in this company or trade in this company. We don't invest. All right. Hopefully this helped. Next class will be a lot more informative of what we're looking at now that we know how to build the system to look at it. And so lastly, I want you to realize that I pulled data from 2021 because I don't want anybody to think that this is a way that you identify your trades, right? This is the first quantitative step to finding what companies within the sectors are outliers and what companies we're going to focus on, and dig deeper into. All right, so hopefully this helped. Later.